What's up everybody, welcome back to RoyalBluFX. In today's video, we're going to talk about the extreme killer strategy that a lot of people fear to take, all in this video, so stay tuned. This is an all-out new strategy that I've been utilizing for quite some time, that I've made up for over the course of 6 years, and I've been fortunate enough to make thousands and thousands of dollars. Also, I want to mention that we do have our course finally available. It is being pre-released right now on YouTube. We don't have the website yet available because it is still under maintenance, but once we do, we'll notify everyone, of course. And if you're new to this channel, guys, go ahead and subscribe because we always give out free content. Everything is free. It only takes just to subscribe. That's it. So without wasting any of you guys' time, let's begin with this video. All right, guys, so this video is about the killer entry strategy that everyone is afraid to take, and I will show you how it's done. But before we start, I want to show you some examples of how a lot of other traders typically take trades, and I'm pretty sure when you're watching this, you are one of those typical traders. Now, it's not to say that it's wrong. However, it is more safe and extremely safe the trades that you guys are actually take. Okay, so that means when price is bullish, okay, a lot of people are trained to take entries based off of a change of character. I'm pretty sure a lot of you guys know what that is. It's a chalk, right? Once price approaches another low like this, we anticipate for prices to break this low right here, right? Long story short, everyone is waiting for prices to come back to a supply zone. It's very typical for a lot of traders to do this, right? And then once price comes into your supply, you then enter, right? Now, this is a safe haven for a lot of traders. This is a confirmational entry, right? Versus an entry if you were just to take it aggressive from the supply zone from up here, let's just say, right? So this would be the aggressive entry, and the confirmation entry would be here, right? Now, again, it's not wrong to do this. However, it's very safe and less likely to happen more times than not, meaning that it may not happen a lot of times. And then obviously we understand in the markets, a lot of the setups in the markets don't happen 100% of the time. We have to be cautious and obviously available to understand this kind of information, that everything doesn't happen 110%. So I'm going to show you a killer entry, the extreme killer entry that a lot of traders are fearing to take because they don't have a confirmational entry like this perfect setup, okay? It's not to say that I don't take these entries. However, I take entries that are earlier, that happen earlier before this, okay? So let's talk about this right here. So this is the entry that a lot of people fear to take. Let's go here, there. All right, so say for example, we had before the change of character, okay? And I actually encourage a lot of traders to take trades before the change of character. Before the change of character happened here, okay? This contradicts, right? So the higher highs here, right? The bullish market is contradicting the bearish market. So before price even falls, right? This is where we're standing off right now. A lot of traders are waiting for prices to have this low broken. Why? Because it confirms that the market will continue to want to go bearish, right? It'll confirm that that the suppliers are strong here, right? Not the buyers, right? So anytime, if you can look at the previous structure, right, you can see price was going bullish, right, for some time. And all of a sudden, right, price breaks this low, right, then it turns bearish, which means now we have supply overtaking the buyers, right, which is very typical. However, have you guys known, and I'm pretty sure a lot of you guys have experienced and or have seen that the market, when the market goes below a low or a high, it does typically sweep liquidity, which is it could be in the form of a swing low. It could also be in the form of double bottoms. It could be in the form of relative lows, like so, right? And then price runs back the other way, just like this, right? Just like this example, right? So in this case, you wouldn't be wrong to say, if you waited for a break of the low right over here, you wouldn't be wrong to say to look for an entry right here at the supply, right here, right there, because we know that's a weak demand, strong supply. That means demand is weak to take out this high, supply is overtaking, so that means the last supply zone that we need to mitigate is this supply zone, right? However, this is all good and gravy. It's a great textbook example, but a lot of traders hate to take these ones because a lot of traders are fearful of taking this because of this scenario. So say, for example, again, right here, we don't have this chalk broken, right? Right here, we have buyers buying and sellers are selling, right? Both buyers and sellers are contradicting the direction of the move, right? The direction of the entry, let's just say, because if this was our supply zone right over here, okay, something like this, and we're all good and ready, waiting for supply here for the supply to be respected, then we understand that this here needs to be supply based, not bullish based. Okay, that means that at some point in time the buyers are gonna stop here, right, and not continue to exceed above the supply zone right here, right? So that means we are typically wanting for the supply to take advantage of the direction. So how do we do that? Well, first things first, my type of entries that I like doing is looking at where the highs and lows are, especially for liquidity, okay? Because we know liquidity is the driver of the market. Therefore, I am buying in on the liquidity-based entry, not on the break of the low entry. Now, every low and every high is liquidity, okay? However, if my bias is bearish and this is a supply zone, I want to take the utmost, biggest move for price to run. As soon as we're in the supply, I want price to run, right? I want price to explode. So what do? I start looking to mark my supply here, and I mark out, I have to literally and visually see that there is another high, internal high right here. Okay, just like that. Once I see that internal high, that would be the inducement, okay? And that's where I would enter the market, right over here. Now, the reason why I would do that is because many times, as we know, the market does not give us perfect conditions. It doesn't give us the perfect entry conditions all the time, but when it does, it does. When it doesn't, then we feel sometimes like we're let down. It's, you know, it's depressing, right? Why am I not able to catch an entry right over here when price literally just starts to run from here? You know, just doing, I mean, pretty much this example, right? Like, you would wait for prices to come right over here, right? You wait for price to come and give you that chalk, that change of character. However, it's been respecting this demand zone, right? You can see weak demand, strong supply. However, the market went above these buyers, right? This high, swept it, and continued bearish, right? So this is my indication, right? This is what's considered a falling knife. Now, this can be a falling knife. Essentially, is when price is still bullish, okay, and people are afraid to take the sells or the buys. In this case, it could also be a buy, right? So if let's see, you know, something like this, actually, there we go, right? And we get something like this, right? Price has not broken the chalk yet, or the high, just like this, right? And then we take an entry right here, right, at this demand zone, boom, right? And to do something like this, and then good luck trying to catch the market because it's on its way to run bullish, right, impulsively. Now, this happens for various reasons, but one in particular reason is because of the liquidity setup that price has already presented itself with, which is right here, right? So that will be your liquidity, okay? Every high and every low is liquidity. Swing highs, swing lows are liquidities, as well as relative lows, relative highs, double tops, double tops, double bottoms, triple tops, triple bottoms, okay? So everything in the market is liquidity. However, these are the most extreme and most impulsive entries in the markets that you can ever find, and they work amazingly. So I'm going to go right now on a live chart, on a live market, really, just to show you how this works, and then we can, yeah, you'll be able to see it. Okay, so let's pretend. Let's go from here on the daily. We're starting on the daily time frame. Let's play this for a second. Okay, let's see, we took a high out here, actually, so I would be right there, right? We took this high, right, which is a bunch of liquidity, so we would go on the 15-minute down here. Let me get off the sessions, actually, here. This might be a lot more helpful to show you guys. There we go. Okay, so once we swept this liquidity line, right, now watch this. Bear with me here. Like this, I've never seen this, obviously. And so this is a good prime example here. All right, everyone right here is waiting for their chalk, right? Right there. Now, you could, this one actually over here gave us a chalk, right there. It gave you a chalk. However, a lot of people would be waiting for this supply. That's not wrong to say that this would be your entry, right? However, do you notice what's above this supply, right? Price took out that liquidity right there, just as I explained to you guys, right? And what do? You enter from this high to go bearish like this. Now, these are explosive. You can see how price explodes to the downside, right? Without even having to give anyone else a chance to enter in the market, right? If you do the line chart, I'm pretty sure, yep, right there. Look, notice this low right there and this other low right there. This low has not broken this low yet, right? This, in fact, is a liquidity sweep to take liquidity from this low, right? But it ran back up, okay? So in my eyes, okay, when I teach traders how to enter correctly, we don't want to be in the safe. We don't want to be in the safest, how do you say it? In the safest conformational sort of typical trader entry, okay? We don't want to just wait for the change of character. Once the change of character happens, you are already too late. In most cases, you're already too late. However, this setup here, like I mentioned from my previous drawings, right? There's your high, there's your low, right? People wait for this change of character, right? There's a change of character. This one actually happened to be perfect, right? So this would be a great scenario, right? So for you, the typical trader out there, they'll be able to see this sell, right, and be able to enter there. This is fine. In other occasions, it doesn't happen like this, right? However, take a look at this example here, though, right? If you translated this low right here, this break, right, because it is a break of structure actually, but it's a liquidity break. A lot of traders would wait for this right over here. So they would sell, right, and then they would most likely want to hold the trade down to their next low, which is their old low. So that would be right down here, right? So this is what would happen, right? And then to their surprise, the market takes them out. It might be a break even, or they might have lost the entry, right? So in my eyes, notice again here, the high never broke the low, right? It actually never did because the line chart is right here, all right? So price runs up, I wait for the liquidity to be swept, and then I go in for the killer, right? But then typical entry traders, right? Typical traders would see this. There's your chalk. Here's your entry, right? Which is a good little safe entry to do in many cases, right? Let's look at another example. So let's play this out. We're gonna look for another supply. Oops, I'm clicking the button here. It's not moving. Okay, let's go back on the daily right here. All right, let's go look for another move. Okay, so we have this swept right over here. Okay, that is your liquidity line. Excuse me, I went a bit too fast there. Let's go see if we can find anything here. Okay, there's nothing here, right? So that's fine. Let's go back on the daily. I'm trying to show you guys, you know, everything that I'm seeing, right? Rather than just cherry picking everything. Let's play this out. Okay, nothing here. We also got nothing here. We might have something down there actually. No, we don't. Let's go back on the daily. Okay. Let's wait for another low to be swept or a high. Okay, so here's one right there. We can see that price came over here, swept this liquidity, swept more. Let's see if we can get a bearish move down. Okay, so right there, we're waiting for price to get back to this break and retest. But in the meantime, we can actually wait for price to get back, right? So let's look over here. All right, so again, typical example. This one may or may not have been, this may or may not be the best, but I'll show you here. Here's a low, right? People wait for this to be broken. Then people wait to enter from the supply, right? Then they get swept out right over here. Okay, so they'll get swept right there. Let's put this to a red line here, just so you guys can see, right? So that's where you get swept. However, in my case, I would enter a little bit differently. I would enter from here. Okay, so, and the reason why is because that's liquidity right there, right? I would enter there. Notice how I'm entering at before the break happens. Okay, just like that. Before the break happens, I would have already entered. Boom. So other traders that have entered after the chalk would have lost this trade. Right, at that 50 EQ, probably riskier. You might even put your risk a little bit above the high, right? Maybe to gain this, right? However, a lot of traders would have lost this. They typically put their stop loss right above the high, right there, and then price already took off. Okay, so that's another example. Let's look for another one. Okay, I can see one right over here. We have a sweep of this high, right? A lot of people will wait for this chalk. Okay, my entry is right here. There's your sweep of liquidity. I would take an entry here, right? Risk at the high and take price bearish. Notice that all the time, this one's a little premature here because this one is still building, right? You can see prices are still running. However, we're looking to get into the impulse, right? The actual impulse. And here we go. Here's another example. This one's impulsively bearish. Here's where a lot of people wait for the chalk, right? Now, I don't know how you would enter this. This could look like a breaker, maybe. I don't know. You know, a lot of people have their own ways, right, to look to enter. You might be able to do this supply zone, but then you can see that wick did not reach your supply zone. So you might have missed this, right? Depending on how you see this, because everything is obviously subjective. You would have seen this most likely as a breaker as well, right? So you might have done that, maybe. I see this as liquidity sweeping, and then I'm entering in again. So that's that for that, right? I want to show you guys here how, right, from all this buying pressure that's happening here, right? Everything looks bullish, right? Until we get to this low here, right? This buy here is still on the buy side, right? It's still buying, right? We're still bullish here. However, when price is starting to return to go bearish, right? It did break this low. However, in here you can see that the buyers are contradicting the sell. That means buyer pressure, excuse me, it's right here. Buyer pressure, right? Buying pressure, selling pressure. Then buying pressure goes back above. So this, if you saw this, you might have thought to yourself, right here, we're still bullish, right? Just like this. So why would anybody want to go against a bullish falling knife, right? That means price is still running bullish. What if I entered here and then price all of a sudden just went against me, right? Well, this is the know-how of the market. This is how I know price is going to go to our direction, bearish, because we've been obviously overbought here. You can see that, right? Overbought, everything was extended, and then we look for prices to go bearish. It's just it's the rule and the law of price. Okay, let's go back to the higher time frame and let's go do another example. Let's see here, we got that swept. Okay, so we got this liquidity swept here, right? And then let's go down to the lower time frame. Let's see if we catch anything. All right, so here we go. Let's play this quickly. All right, nothing in here actually. To be real honest, there is a chalk here. Okay, people would have waited for that. Nothing really that gives away. My entry criteria is not there either, so I would have missed this one out. I would have been sitting out on this one. But then we have the external chalk in here, or right, the external chalk right here. You can see it, right? And then here is your liquidity, right there. All right, let's see if this will play out. Okay, so this one kind of goes into, so it's a little, it's what do you call it? It's sort of going bullish and bearish at the same time. The typical entry here, excuse me, let me just do this. Boom. Because the range here is so big, right, from the zone, from this low to this high here, it's too big, right? I wouldn't want to just enter this way and leave my risk this. It looks enticing, but I would want, because this range is so big, the zone, I want to minimize it. So I wouldn't be able to enter the way I would want from this point of view. However, here it is. Here is actually the example right here, guys. We got this break, right? The liquidity, right? And then we have, what is that? There's your sweep, right? So I would want to enter here, actually, with the risk right tight, very tight like this. Now, a lot of other traders would wait for the chalk here, right? I'm already in this trade, right? And then so price runs. Okay, well, I would target the supply zone right here because this is the next high right there, the next low, just like so, just like that, right? So again, a lot of people would wait for the chalk here, right? Whether you enter here or not is entirely up to you. It's a little too late for me. Let's go for supply there, right? You might just be able to sell here just to get to here, right? But I'm already up here. Notice how that impulse starts to run, right? There's no confirmation. This is still bullish. You can see buyers, higher highs and higher lows are happening here, but I've already entered up there, right? Let's do one more example, and I'm hoping I'm talking very thoroughly in this so you guys can understand how these are actually extreme killer entries. You can see how the impulse runs, right? This would have been targeted at the supply right there, actually, because that is a demand zone, not supply, excuse me, the demand zone right there. That would have been the target for that. Because, again, there. Look at that impulse, right? It runs impulsively, right? Same thing with this, runs impulsively, right? Let's continue here. Let's go back there. Okay, we're going to sweep this high. That is also a bunch of liquidity. You can see that from there. Let's see and wait for prices to reverse. Oh, I should be on the 15-minute. I'm on the 1 hour. Okay, let's go down here. Right here, perfect. So this would have been an entry already. Once we had the liquidity swept, right, a lot of traders would wait for this, for a change of character there. I'm here, I saw liquidity here already, so this would have been an entry for me already right here. Remember, just want to show you guys again why this works and why it's amazing. It's because we've just swept liquidity, right? And a lot of people wait for the change of character. By the time the change of character comes, you might be already too late. All right, so we're going to target for the first. Okay, it looks like it was already hit though. This would be the first TP right there because that would be the demand zone we would target. Something just like this, right? And you can take the rest if you want, right? Continuing bearish because this is a higher time frame sweep. That means we could hold the market to the next internal demand here. However, this is the final destination right here. I know this video is not about demands, supply and demands and targets, but bear with me here for a second. Okay, so right here, once you get this change of character here, okay, traders will already have been intact, right? So this would have been their supply. But look how ugly and huge this supply zone is, right? So you might have had some success, right? I'm already taking the major impulse, which is here, right? This is still impulsive, okay? People are seeing this as a supply zone, so they'll just enter immediately. I already took most of my, right, the first TP right there, right? Second TP will be here. If it ever chooses to do so, to come here. Okay, there we go. All right, this one was struggling a bit, as you can see. However, we could have gone in for a second entry based off this sweep. So let me see if I can hunt for more sweeps. I know. Okay, there was another sweep right here. Right there. I see that. So this would have been another entry right here. Whether I enter this aggressive or not really depends because once it sweeps, we can wait for the internal swing high. I don't see it in here. I would have to go in a lower time frame. Can I go in a lower time frame? Yes, I can. Okay, let's just do one more here. This one does not have my entry criteria, so I would avoid it altogether. It did sweep liquidity, but it doesn't have my entry criteria here. However, those supply and demand traders would be seeing this as a chalk and most likely enter from here to go bearish. That's okay. That's totally fine. To each their own. Here's my entry criteria here. I see it here. We have that low. There's a bunch of liquidity. So this was liquidity here, right over here. Then we have the inducement right at this top, right? So this is liquidity. This is your inducement. So I would wait for the inducement to be swept, and I would enter immediately. So this would be my entry criteria right here, immediately. But for those change of character traders, again, they wait for the break, right there, right here, chalk right there, right? And who knows, depending on your supply zone, are you a trader who takes entries, say, from the outer part of the zone or the 50 EQ part of the zone, right? It could be the 2.5, right? The 2.5%, you can take the 0.5%, or you can take it up to here, right? If it goes above, right? This is very subjective, right? Because this is a big zone, right? You enter here risking this much profit, right? So that to me is a little on the extreme side. All right, so we would have targeted this low, just like this, because that was our last target here for the demand, right? So notice what I did here. I entered here based off of the sweep, right? Because I saw the liquidity, and then this is your chalk. Other traders come in to continue, right? Now, it's not just, I'm not trying to say here that the change of character is bad to take from. I'm just saying that the more impulsive moves come from where liquidity sweeps are, and especially before the change of characters, because you want to catch that move before it gives any other traders confirmation to come into the market, right? So, guys, I hope you guys learned enough in this video. I hope you liked it. I hope it was insightful. If you liked it enough, as much as I do, obviously, as much as I like my trading strategy, go ahead and like this video and subscribe to our channel. And please leave us a good comment, or good, or whatever, even a bad comment if you want. Tell us why you like this video and what you found informative about it. And if you had any questions, just go ahead and write us also a private message, guys. Until then, I will see you in the next video.